We have inflation reports and the Fed meeting this week. It's going to be huge for us. I am Dr. Stock, Doctor of Education. And do you think Santa's favorite genre of music is rap? We have the CPI coming out on Tuesday at 8:30 a.m., the PPI coming out at 8:30 on Wednesday, and then we have the Fed meeting starting on Tuesday and concluding on Wednesday. Then we find out their interest rate decision at 2 p.m., and then at 2:30 we hear Jerome Powell speaking. It is going to be a big week for those catalysts. I'm going to talk about it in this video. I'll tell you about my Patreon where you can see how I'm playing this market, where you can find my options course, and then also about Moo itself. In the meantime, I do want to get right into the commentary on what we could expect to see for the CPI coming out, as that is the inflation report. The CPI report for November is what exactly we want to look for, what we want to talk about. So I want to put up the charts for you for that. And here we go. Let's put up trading economics. We'll give a little bit of flavor about what's coming up for us today. By the way, just a side mention that we have here, the consumer inflation expectations for November. Last month was 3.6. Right now, the trading economics forecast is 3.8. We'll see if that goes up or down for us. Now, mind you, that is also something that can be a catalyst and most definitely should be watched for around 11 a.m. So we'll see if the stock market makes a difference right around there. If we come in at a lower number, lower than 3.6, especially, that is something that can be a positive catalyst for the markets and can be very good for us, especially in light of what's expected to be a pretty darn good inflation report. So let's look at the CPI on Tuesday. So right now, we have a consensus of 0.3% and then 4% for year over year. So this 0.3% for month over month, I think that that's actually going to come in at the same 0.2 that we saw for last month. I don't think we come in at 0.1. I do think this is going to be a low one for us, and I think it's going to be incredible. So I'm going to watch for that. You can see trading economics forecast also coming in at 0.2%. Core inflation rate, I also don't see 4% coming in for us. I think we're either at 3.8 or 3.9%. And I'll show you on the charts what we have for CPI as to why that is. So then we look at the inflation rate here for month over month. I don't think we come in at 0.1 or 0. I think this is more likely to come in at about negative 0.1 because of the decline in energy prices that we had through the month of November. So we'll watch for that and see what we get. But I do think that this is going to come out to be a negative value for us. And then the inflation rate year over year, this, I think, is going to be the biggest catalyst here because I think that there's a strong possibility that we actually see this come in because of the seasonally unadjusted basis, that we could possibly see this come in under 3%. So that would be absolutely huge for us. As I look at my numbers here, I actually have it as anywhere from 3% to 3.2%. However, that's based on what we have historically. If we factor in the significant drop that we had in energy prices throughout the month of November, then it's a good possibility that we actually see it down in the 2s if it's something that beats out what we see as a historical difference. So let's take a look at that. So right now, what we have with the CPI, you can see right here, it says not seasonally adjusted. So that's one of the first things that I want you to pay attention to. So not seasonally adjusted, this is where we get those year over year numbers. And when you look at this, you can actually see around the time that October, November, December hit, because you get a little bit of a trough that happens in here. So if we move ahead a little bit, there's another trough, and then we get into October, November, December area, and then move ahead from there. Here we start to trough again, October, November, December, and then we can keep on repeating that. I think 2017 may have been, it goes a little bit flat for us. I think on a core basis, it actually ticks up a little bit. But again, here's another trough. And so I expect to see that trough happening. The only time that trough hasn't happened in recent history is 2021. Look at this. So here's October, here's November, which went higher, and here's December, which went higher, and then January, which went even higher. And that's when the stock market really started not to like things. It's that end of November into January time. And that was when we started to get unanchored inflation expectations. And then we had the Fed start to tighten things up around March. And then you can see things significantly level off by the time that we get to June is where we started to really spike. And then we start to get that trough coming back in, a little bit of normalcy back in for us when we get into the end of 2022. So 2021 was that exceptional year for us. So I do think we're going to get that trough type look to it. I think it is possible that we actually get a good dip here. Now we are fighting against a lower baseline. So October was up, November was down a little bit. So October being up and November being down, I think we need a steeper drop here in order to see those 2s show up on a year over year basis. I do think that is going to be a very strong positive catalyst and absolutely should be watched for if we come in 3% or lower. As a matter of fact, we start to see those 2s happening. That's something that's going to be very shiny for us. And that's for CPI for all items, not on a core basis. So let's look month over month. So for this one, you can see last month we came in at what rounds to 0 or 0.0%. Month over month coming in flat. I think it's possible that we come in, like I said before, 0% or even all the way down to negative 0.1, possibly even maybe even a little bit lower, but seasonal adjustments can always mitigate what I said with those troughs that we saw for the CPI for all items. Now, if we go over to the core numbers, and this one is again not seasonally adjusted, but this is less food and energy, so we're looking at the core, you actually get a little more smoothing out of this, and that's exactly why they take out food and energy, is to reduce that volatility, and it does smooth out the CPI, but you still get the little tiny troughs in here, and what we have is almost even between October and November, but I do think November is going to pull back on us a little bit, so we're going to have to watch for that, and if it does, I think it's possible that core comes in at more like 3.8 or 3.9, so dropping out of the 4s and down into the 3s. And I think, let's go back over here real quick. Yeah, what we had for October was 4%, and November right now is being forecast to be at 4%. I think 3.8 to 3.9% is a definite possibility to have it in there. So 3.9 I think is solid. 3.8 I think is possible. 4% is reasonable. I would call it that. But I do think that we see 3s come out from that. And I do think it's going to be a strong positive catalyst for us for the markets. And then when we look at the month over month numbers for core, for that one, I had that coming in at 0.2%. And again, Trading Economics has that coming in. They say, well, consensus is 0.3. Trading Economics has that forecast at 0.2. I think it will come in at 0.2 again as well for that. But remember, month over month numbers are on a seasonally adjusted basis. And so that mitigates some of the effects of what we see versus the non-seasonally adjusted bases that we have here. Now over to the CME FedWatch tool, just to take a quick peek. Right now I have this set on May, so looking out to May's meeting, because this is the first time, according to the numbers right now, that we actually have over a 50% chance of a rate cut, which used to be March. And this changes all the time. It changes daily, so it's possible it does go back to March, and we'll actually see. I think the CPI is something that's going to shift this in a huge way. By the way, I think the PPI is also going to be very strong for us at 8:30, and I think it's going to make it hard for the Fed to keep up a hawkish tone. They'll probably say something about holding the rates steady where they're at right now, but still willing to tighten is my guess, willing to raise rates if they need to, if inflation proves to be persistent. And I think that they're going to double down on that higher for longer scenario, but I don't think that the bond market's going to believe it in light of the CPI numbers that I believe that we're going to get. So I think that that's very much worth watching. If we go back to March, just to see what that looks like right now, we're just under half. We're actually at just between 41 and 42% for the federal funds rate. The possibility of getting that cut, still most likely the case, over a 50% chance that we actually are steady where we're at, and a very small chance that we actually have a rate increase, which I don't see happening at this point in time. I do not think that we're actually going to have rates move back up on us. So CPI, I think, is going to be a strong positive for us. I think PPI is going to be a strong positive for us. I do think it's worthwhile to mention that should we see CPI go negative for too long, that can lead into a case for deflation and can point to recession. And we want to absolutely avoid that. If the Fed's looking for a soft landing, then they won't want to see numbers go too negative for too long. I think negative numbers as a one-off, not bad. Negative numbers that are persistent, that we start to see a deflation in those prices for too long, can point to recession, and that's something that can tank the markets. But I think in the near term, I think November's numbers are going to be good, even if some of them do come out to be negative. Some of that can be expected, especially on the not seasonally adjusted basis. So for those year-over-year numbers that we see, should that come in a little bit softer for the indexed values for November, that is something that's expected. I showed you those troughs on those charts. So let's move from there into the charts themselves for the stock market and see the impacts that we can have. And the very first thing that I have up here for you is SPY. And if you were watching my live stream with Stock Moe, I'll put that link down in the description, by the way. You saw that I said this thing could hit 460, and then it did, and then it sort of retreated from there. So let me change the chart a little bit so we can see it. 460 is this yellow line that I have on here, by the way, and you can see that we came up and we actually peekabooed above it for a little bit. So the high on this was 460.75, and we actually closed at 460.20. So actually I may have moved that line a little bit. That was at 460, so I had to move it back down to 460 where I want it to be. And right there we go. That's at 460, and then you can see the little wick on the candle that's up above that. And so for the SPY, I think the SPY is going to be treated very favorably. We'll say I think the Nasdaq is also going to very much like what we see there. And I think even the mega caps, that even though they might sort of be pulling back a little bit, I think that they will also rally along with the rest of the market. So here, as we look at the Qs, you can see that we broke the top of this trend line. And so for this symmetric triangle pattern that we have here, that we're pushing out through the top of this, and that's something that I think is going to continue to push for us, and then we could possibly see that 394 pop out. As a matter of fact, I think that November numbers will actually lead to December rallies, and that Santa rally is going to be very good to us this year. So we're going to have to watch and see if that does in fact play out. Now, mind you, the Fed could change things on us. Inflation reports, if I'm wrong, could change things on us, but I do think that we have some new all-time highs coming our way. As we look at the Qs, which track the Nasdaq 100, I think that that's going to be good. I think we'll push up above that 394 and we'll start to actually flirt with 400 as soon as this week, which could be pretty darn cool because I think 403 is about where we topped out before. So be on the lookout for that. I do want to bring up IWM. This tracks the Russell 2000. You can see it's been retreating from 188, which is this top line that's up here. And we have support going all the way down here at about 184. And then another support below that all the way down at 180. So we want to watch that. We're above the 200-day. We're above the 50-day. We have a golden cross moment coming up. I think that it's most definitely going to happen for us sooner than later. We came off this inverse head and shoulders pattern that I had drawn on here. It's been a wonderful rally. What do we have room to? I think that we could actually have room up to that 200 mark, which right now 197 is where we find those previous peaks. And if I zoom out more, you can see that historically we've topped out right around 197. I think that this is the run that can push us up over that. And I think that we're good until we start to see things that could be signs of further cracking in the economy. If the leading economic indicators keep on pointing to recession, if we start to enter a period of deflation, those are all things that can be narratives that turn us back around. And so we'll be watching for that. But I do think December into January can be very strong for us in the markets. Now, a few stocks to pay attention to. First thing I'm going to do is actually go to an ETF TAN, which tracks solar. I think that this could be a big rallying week for solar. As a matter of fact, maybe even a big rallying 2 to 3 weeks for solar. So I think this is most definitely worth watching. So TAN, as I look at this, we actually have a double bottom on this and something that actually looks a little bit like an inverse head and shoulders. So let me move that up there, click this and make sure I'm on the brush tool. So we have a little bit of a shoulder here, a little bit of a shoulder there. And then we'll also this double bottom here, which we could actually kind of treat as the head of this thing. And then where would that put the neckline? The neckline, this would be right at about, I'd say the 50-day, which is right now at about $48 per share. So we wouldn't be looking for that breakup above 48. And I think that this is the week on strong reports for inflation being reduced. I think that that is something that we can most definitely see happen. One of my favorites in this space is Enphase, and I think that this most definitely should be watched in the pre-market hours right now. Let me see where this thing's trading because it was just under 100 when I looked earlier. In the pre-market, we're actually just above 100. I think that this is going to be a bounce for us off of support. I think when we open above 100, which mind you, I had the support with 100 right here, we could peekaboo below it. We still have this white line here that we're currently above, which is the long-term downtrend. We could possibly have that as support as well. But like I said, I do think that this is one that can bounce strongly for us. You can see the resistance and the targets that I have on here for Enphase as well. And I talked about in last week's video, Tesla is another one that I think could rally big. I think that this could be the week where it's possible that Tesla starts to push up. And I adjusted this resistance number from 247 down to 245. I think it's a much better price that we have here for resistance. And then we have room up to 250. Should this be the week that I think that we could get in the inflation reports that I think that are possible and the positive news that we get from the Fed most likely, those are all the things that I think absolutely could happen for us. I think that's what allows us to push up possibly up to this first target of 260. If things go really well for Tesla, we could see 268. Mind you, that would break this bearish channel that we've been in. Let me reset the chart view so you can see that. Even though it's not the best for the numbers, you can see where we've been trading. And I think that this is one of those times that we can start to push up out of that bearish channel and start to make a new formation for us. So I think it is getting close to time where we could see that break. To tell you about the Patreon, I want to take just a quick moment to tell you about the Patreon. That link is down in the description. I have my Tesla stock price prediction, my Nvidia stock price prediction, and earnings projections for both of those things over at the Patreon. My Discord is available there. Through that Discord, you can see my buys and sells and how I'm playing this market. I also have my options course that I'm constructing over at the Patreon as well, and that's free to all paid members for the Patreon. And then Moomoo, if you want to trade options using the same platform that I do, you can use Moomoo. The link is also down in the description. You get up to 15 free stocks and 5.1% APY on your unused cash in your account through doing so. So let me pop that back down and talk to all of you directly here. Now, CPI, I think it's going to be great for us. PPI, I think is also going to be just as good for us. And then the Fed, I don't think that the Fed is going to have much to argue against. I think we're going to see that we're on that downward path for inflation and that the Fed is going to say that things are still moving in the right direction for us and that they're still going to keep the higher for longer narrative going. But I think the markets are absolutely going to love what we see in the inflation reports and what we have to hear from the Fed. I think the inflation reports are actually going to tip the scales a little bit more and really tell us more about what the Fed is saying and what to believe and seeing the path that we're on. And I think that this is that time that we could actually push past those all-time highs that we have in the SPY and in the Qs and move on to new all-time highs. And I do think the Russell 2000 stocks could most definitely outperform in this sort of environment. I think solar companies and also automotive, especially where Tesla is involved because they're still in that space with their EVs, they could do extremely well over the next several weeks, along with, like I said, with the Qs, with IWM. Also, I think the SPY is also hugely going to benefit from what we see, and it's all going to be very good until we start to get news of too much disinflation to the point of deflation, and then that's something that, like I said, if we see too much for too long of negative numbers coming out from the inflation reports, then that starts to change the narrative. So we want to be very much on our toes for watching for that change in sentiment, because should we get that change in sentiment, things were going to come back down in the markets really hard, and we want to be ready for that too. Thank you guys for watching this video. I really do appreciate it. Check out the link for the Patreon down in the description. Check out the link for Moo. And as always, I am Dr. Stock, Doctor of Education. Remember, my friends, that learning is earning, and we'll see you in the next video.